Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, March 11, 2013. Well, a white body candle today, and a day where the buyers have taken back control of this market in the short-term time frame by closing up towards the high. But no change of trend today. The previous day's trading, we had an outside day in bar chart terms. Today is an inside day, and prior to that we had establishment of a first time frame uptrend on this fairly bullish candle. Previous to that, downtrend in place, and we just made a higher low on that candle. And the market had attempted to rally for the next day's trading, found resistance up above the Tenkan Sen and around the 131.45 level, sold off, found support at the 129.68 level, and today we've tested roughly down to that area again. So for about 5 or 6 of the previous trading days over the last week and a half or so, the 129.68 level is held as very, very important support for this market. And moving forward, it is crucial to this market if we are going to see this market bounce or trade lower. If we do see a bearish breakout down below 129.68 and a bearish close down below there, then this market could easily be trading down to 128.57, so we do need to be aware of that. With today's trading, also with this bullish candle where the buyers have found some upside momentum, we did see them find resistance at the Tenkan Sen, and that's not unusual for that to happen. The green line here is the Tenkan Sen, and we saw the market unable to trade through there, and a small shadow highlighting a small loss of commitment by the buyers. There is still a possibility of the market trading through there, but we do have that close by resistance at 130.79 and then above there at the 131.45 level. Now, just looking at some of the patterns that have been in play, previously you'll recall that we were examining this small flag type pattern that formed a mid-trend, and the market was trending down strongly. Very fast first time frame downtrend led to a congestion that retraced part of this strong downtrend. We had a target well down below where the market's trading, down below these important areas of support. But now we're not too sure whether this market will find those levels. We are congesting now, very volatile congestion, and this is starting to look like a megaphone pattern. Prior strong downtrend and this strong volatility that that's coming into the market. The megaphone pattern tends to have 5 peaks and troughs. This doesn't fit that type of pattern quite exactly. But it's unusual to see these patterns at lows. They tend to be patterns that we see at highs, but there's no reason that this couldn't exist at a low. It's just a little bit unusual, and it doesn't fit the perfect type of megaphone pattern with the well-defined peaks and troughs, as I've mentioned. But the ramifications of this are quite similar. It's really about this volatility and this battle going on between the buyers and the sellers, and a very strong battle where the buyers are acting in a very strong manner by taking the market to new highs, but the sellers are behaving quite strongly as well by establishing new lows. So there's great volatile battle going on, and that's what you tend to see at termination of strong trends. So there is a possibility of this market trending high. There still could be a breakout to the downside, and that is in terms of a bigger picture. If we look at where this pattern exists in terms of the Ichimoku charts, it's below the cloud and below the Kijun Sen and Tenkan Sen, and it's probably in that context more likely to be a breakout to the downside, so we do need to be aware of that. Obviously any breakout to the upside will be met with very, very strong resistance by the cloud, so that is an important factor to take into account. But the important thing here is this volatile trading that's going on, where the buyers are very strong 1 minute and then the sellers are quite strong. Just looking at this here though, we did see the sellers lose commitment in a major way on that previous day's candle, and then the buyers today for today's trading haven't really matched the volatility, so we are now seeing some weakness by the buyers and not in line with the previous strength that they had, and that may suggest that there is a possibility of a downside move, but still at the moment no sign of that, because the buyers here still are quite strong in relative terms. Now, in terms of the Fibonacci extension, and because of this volatile trading, and we're not getting any clear signals from this because of the outside days and the inside days that are happening in this market at the moment. But the trend is still up technically, so our target here is the 161.8% level, and that was reached for the previous day's trading, and we saw strong rejection from there. So that tends to suggest that there is a possibility of a change of trend to the downside, and that's supporting this idea that the breakout from below that volatile congestion area could be to the downside. But today's candle, certainly no sign that the sellers are strong. And similarly with the Fibonacci retracement of the prior downtrend, tested to the 161.8% level, rejected from there, and also suggests that there is a possibility of a downside breakout. So that makes this area down around these lows, around the 129.64 level roughly, makes it very, very important for this market. Now, obviously, in terms of Ichimoku, a bearish market in the long-term time frame by trading down below the cloud, we had an indecisive bearish breakout on this spinning top type candle, a rally to the cloud, and then a strong sell-off, then another rally up to the cloud and through the Tenkan-sen, where the market was unable to close up above there, and now testing to the Tenkan-sen again today. So the Tenkan-sen has acted as very solid resistance for this market, and moving forward, it is an important area. If we do see a bullish close up there, it could signify a change in sentiment in the market, and then possibly we could see the market testing to higher levels if we can break out through 131.45. But it is still holding, and important is this 129.68 level of support. Now, in terms of the medium-term time frame, the market is trading down below the Kijun-sen, the pink line here, suggesting that we have a bearish market in the medium-term time frame, and also trading down below the Tenkan-sen, obviously the green line that we've already discussed. So bearish in the short-term time frame, so bearish in all three time frames. Looking at the Chica span, that's below the corresponding price action, so it's confirming this negativity that we're seeing in this market. And all of this does suggest that it is probably more likely that there will be a breakout to the downside than the upside, but very, very strong support at 129.68. We do require confirmation of that, and confirmation would be a solid bearish close down below there. If we do see that, the market could quickly trade to 128.57 and then down to this highlighted yellow zone down around the 127.50 area.